Finding the right advisor is a process. You need someone you can trust and know that they have your best interests at heart. When we come back, some steps to help you find the best advisor for your situation on today's episode of Elevate Your Wealth.
And now, Elevate Your Wealth with Mark Stimson and Casey Elkins.
Welcome into Elevate Your Wealth. Your hosts are Mark Stimson and Casey Elkins. You can find them both at Elevated Financial Management. 42 years combined experience between these two, helping hundreds of their clients get ready for retirement. They're certified financial fiduciaries. I'm Morgan Patrick, consumer advocate. We go back and forth on all the different retirement topics each and every week here on Elevate Your Wealth, but we also give you an opportunity to take action for yourself. Now, if you have not started planning, or maybe you're in the middle of something and need a second opinion, we open up 10 calendar positions for the upcoming week with Elevated Financial Management. And these appointments are no cost, no obligation, and simply no pressure. So stay tuned. We're going to open those up here in just a little bit. So the road to retirement, it is long. Is your current advisor the right one? That's a good question to ask. Is it time to transition from acquisition to distribution and preservation? These are all questions you can ask yourself. So we wanted to break down the steps to get to this point, okay? So the first one up, Mark, don't go it alone. A lot of people out there are trying to do this themselves, and I tell you, working with a pro, that kind of relieves a lot of stress.
Yeah, there's a lot of advertisement right now about using a robo-advisor, right? And when it comes to this type of planning, you just don't want to do it. Don't try and wing it, which is what a lot of people are doing right now. They're so worried about fees and costs, and they need to be, but there's a way that you can do this. And we're going to talk about this on the show. Are you really getting the advice and the help? And is it worth the cost? We're going to talk about that. So all I would say is the rules for this type of planning, they are changing rapidly. We've just seen in the last 3 years all kinds of different provisions to the tax code change. And so you really need to work with a trusted professional that's going to be focusing on tax planning. What about wealth transfer? Do you need a trust? The legal ramifications of the different decisions we have with durable powers of attorney. All these things are things you need to be concerned and worried about. And that's why you need to work with someone that can help you in all these different arenas. So the most complete review available. We have a wonderful team here at Elevated Financial Management. We've got a team of certified financial planners that we work with and create every plan that we need for our clients and people to listen to our radio show and see our television show. So don't go it alone. We also have attorneys on retainer that we use for help when we need it. So, we work with a huge registered investment advisor, and I specialize in investments and insurance, as does Casey. So it's all about asset preservation. We can help on the accumulation side, but we want to help you come down the mountain. And there's so much more to that than there is to going up the mountain. So please, if you're listening, work with someone that really specializes in this type of planning, because it can make all the difference in the world.
All the difference. I mean, the road to retirement, it's going to have some twists. It's going to have some turns. But if you have that roadmap, if you're working with someone, a professional guide to get you to your destination, which is not only to your retirement, but be able to enjoy your retirement all the way through. I mean, it is going to, basically relieve you of a lot of the stress that you're probably going through right now. So there are a lot of do-it-yourselfers. So what do? These are steps to kind of help you, especially when it comes to who you're going to work with. So don't go it alone. So, do your investigative process, interview a number of advisors, and come to the decision that makes you feel the most comfortable when it comes to, moving forward with your retirement planning. So Casey, this next one, if you are in the middle of this, retirement interview process, and if it sounds too good to be true, beware.
Yeah, if it sounds too good to be true, it might be, and realistically, the devil's in the details, right? That saying holds true. We do hear a lot about folks that got involved in a great opportunity, or there was this really exciting new investment and things of that nature. And I just to kind of let everybody at home know, Mark and I don't do the latest hot stock tips or things of that nature. We don't do the shiny new investment. That's not what we're about. And we don't really think that that's what's appropriate, because at the end of the day, this really boils down to figuring out what is right in a specific circumstance, finding out what is right for a specific household. And so when you hear about these great opportunities and these kind of one size fits all, these are these great things, they really might not be what's good for you. So you want to ask those questions and get into those details. Not that you have to be in the weeds, you don't have to be an expert in the field of finance to be able to kind of determine if maybe this is not what they say it is. Maybe it's not the investment that they're portraying it as. And so you just want to understand what that looks like, what it means to you. Again, find out, what are the strings attached? And if they say there's no strings attached, well, that might be time to look around, look somewhere else, because realistically, at the end of the day, there's always something in it for both sides, right? At the end of the day, an investment advisor wants to gain a new client, but ultimately that investment advisor should have your best interests at heart. They should be searching for things that are right for you, that are right for your household, that are going to have a true positive impact on you. And again, not just that shiny new stock tip. So try to use good judgment, common sense. If you have trusted friends, maybe run those different investment ideas or different things by those friends to kind of get their feedback, because sometimes when you're in the situation, you don't see all the facets to it. So it's good to just give it a little bit of a pause, understand truly what you're talking about and what you're looking at, and make sure that you're making an informed decision.
Elevate Your Wealth. You're tuned to it. Your hosts are Mark Stimson and Casey Elkins. You can find them at Elevated Financial Management right here in Seattle. I'm Morgan Patrick, consumer advocate. Each and every week we go at these topics. We have these discussions. And it's all about helping. It's all about, getting you in the right position as you move to and through retirement. And this show and Elevated Financial Management, we open up 10 positions on the calendar with the team at Elevated, and they are no cost, no obligation, no pressure. All you've got to do is call the phone number. 866-668-3625 is that number. Again, 866-668-3625. We'll tell you more about these appointments as we move towards the middle part of the show. And if you grab one of the appointments, again, it's just an opportunity to get to know Mark, Casey, their team at Elevated Financial Management. Right now, going over just some steps to get you to that point where you're ready to get started with your planning, or maybe you need that second opinion. So depending on who you're going to work with, don't go it alone. If it sounds too good to be true, and I liked what Casey said there, bounce it off some of your friends. And you might be too close to a situation, but if you've got close friends, say, hey, look, I'm thinking about this. What do you think? And kind of take that information to heart. The next one, Mark, understand commission brokers. I mean, this is a big one.
Yeah, and this is something that we care tremendously about. Full disclosure is paramount in our industry. It should be. Let's put it this way. It's not always really visible, especially in the stock world. And so we believe you should know what you're paying. That's the bottom line, right? How do you compensate your advisor? What's he charging? Now, we're a fee-based firm, right? And so one of the things that you're going to have to analyze is what you're paying worth the service that you are receiving? Because we've realized over the years, if someone is just wanting the lowest, cheapest fee, well, sometimes that old saying, you get what you pay for, can come to roost, right? And you're not necessarily getting the help that you truly deserve. Good help, people are going to need to be compensated for that, but it needs to be fair all the way around. We don't want anybody paying more than they should. But that being said, good help, and we believe that's what happens in our office, is worth every penny. And you'll see that when it comes to all the planning that we can help you do. So the bottom line is Is the fee you're paying worth the advice? That's what you have to decide.
Tell you, it can be overwhelming just when you start getting into things that you need to kind of get in order as you move towards retirement, and you want to have that plan to get you to and through it. So working with the right person, the right advisory team, it's a big decision to make, and we understand that. So these are things that you can do to kind of maybe take a little weight off your shoulders. I mean, you don't want to go it alone. And if you're hearing things that sound too good to be true, what did your parents always tell you? You know, if it sounds too good to be true, it probably is, right? All right. So understand, commission brokers. And this next one, we are all guilty of this, Casey. When we want some answers, we jump online and we start, going into search engines and we throw in the different questions we want. But we have to be careful here because, as far as I know, everything on the internet's true, right?
Yeah, exactly. Yeah. We live in the age of information, and you can find something to support any thought that you might have, no matter how ridiculous it may be. And so at the end of the day, there is some great information out there, but you want to be careful of the source. It's real easy to hide behind a keyboard and talk about something you don't actually know anything about. And we see that a lot. I actually have a picture hanging behind my door in my office, and it's got the outline of Abraham Lincoln, and it says, "Don't believe everything you read on the internet," quote, Abraham Lincoln. I think that illustrates the point, right?
Yes.
That's it. It's so easy to get caught up in this. And so you've got to consider the source. And really, you can just end up with too much information if you spend all your time on the internet reading about something.
Well, let's open it up, man. We got the 10 spots. So what's going to happen for these 10 appointments next week?
Yeah, this is something we want everybody to be thinking about. Please pick up the phone. Don't try and go it alone. What we'd like to do is just have a conversation. If you've saved maybe $250,000 or more, maybe you're working at Boeing or getting ready to retire or have just retired and you need somebody to help. We're going to look at your plan. Our team of certified financial planners is going to do that, and we're going to put together a plan based on your specific situation. So please pick up the phone and call.
All right, here's the number, 866-668-3625. Again, no cost, no obligation, no pressure. 866-668-3625. Call the number, 866-668-3625. We're back right after this. Elevate Your Wealth. Your hosts, Mark Stimson and Casey Elkins, the team at Elevated Financial Management, 42 years combined experience in the retirement planning business. And what do? They help hundreds of their clients get ready for retirement. They're certified financial fiduciaries. I'm Morgan Patrick, consumer advocate, and we go back and forth on the topics, but the goal here is to help. And if you're in a situation where maybe you haven't started planning or you're in the middle of something and you're frustrated and that communication is just not there, you need a second opinion. We have 10 appointments available at Elevated Financial Management, and this is an opportunity for you at no cost, no obligation, no pressure to sit down and I tell you, just clear the air. See where you are. Have you even thought about retirement planning? This is a good opportunity to get started or get that second opinion. The number to call to grab one is 866-668-3625. Again, these appointments, you are going to walk out of there with a written financial plan, and this is your opportunity. If you've saved at least $250,000 for your retirement, these strategies are going to work best for you. 866-668-3625. So we're going to go over some ways that you can kind of generate some cash, pile up some money as you get ready to retire. Now, a lot of people are out there going, maybe there are a few shortcuts we could do. Well, there's some easy things that you can do that will help you down the road. So, Casey, let's start with you. And this is if you are in your company plan, something that's going on at work. Just make it automatic. So that way you don't see it. It goes right into your accounts.
Yeah, you can automate this, right? And that's really what it is. We look at things to automate every aspect of our life, right? There's robots that will vacuum your house for you in the middle of the night. You can set them up on an automated schedule, right? We're always looking for ways to save time. In this circumstance, we want to automate it because it's the right thing to do. We want to pay ourselves first, right? We've all heard that. We've talked about that. You have to put this into practice. If you wait until you have extra money, you'll never do it because people spend what they make, right? It's amazing how if you make, $4,000 a paycheck and it seems like you're just scraping by, and then suddenly you make $5,000 a paycheck and you're kind of still scraping by, and then you make $6,000 a paycheck and you're spending all that extra money. It's going somewhere. You're not saving that difference, but you used to live on much less, right? And so people spend the money that they make. They spend what they bring in. And so it's important for us to pay ourselves first. We want to view it as an obligation, just like you pay your utility bill, your cell phone bill, your internet bill, whatever it is, you get that taken care of to make sure that you can continue to use those services. You have got to make sure that you view this the same way. It's an obligation. It's something we need to take care of. Unless you plan on just working forever and dying at your job, which nobody wants to do, you've got to make sure that you pay yourself first and get this set up, get it automated. Don't leave it to chance. Have a plan, make it happen.
We're all headed towards retirement, and having a plan, having that roadmap, that guide to get you there, and not just to the front door, all the way through retirement. And a plan will ease a lot of stress in your life. So make it automatic when it comes to steps you can take to kind of pile up cash as you're nearing retirement. You get into your company plans, make it automatic. And then, Mark, how about having a budget? I know people don't like to hear the B word, so we'll change it. We'll just say spending plan. If you have a spending plan, you're more likely to stick to it.
Yeah, Casey knows I talk about this at our workshops that we do, and I have people raise their hand and ask how many are having a budget and how many just kind of wing it each month because they know they got a paycheck coming in. And it's amazing. Probably 50-60% of the room admit they don't have a budget. Now, as we get closer to retirement and you go into retirement, hopefully you're going to change your mindset on that because you need to know exactly what's going out, because it's going to be exactly what's going to come in that's going to allow you to live life, right? So I like to use this little exercise. So if you had $650 out of your everything you make each year, does that sound like a lot of money? I think both Casey and I would tell you not too much, but you got to want to save what you can. So the point is, take $650 and break it down. That's $12.50 a week. That's it. And we talk about that maybe the equivalent of a meal. Well, that barely gets you McDonald's right now. I think most of us admit. I know when Casey and I go to lunch now, we're spending $20, $25 for lunch every day. It used to be 10, 12. It's almost doubled in this past few years. And so everybody's getting hit hard with this. So the question is, where do you find some extra money? Well, number one, you got to see where it's all going, right? And you can do that if you track it each month. I have clients just write down when they keep a little spiral notebook, maybe in your purse. If you're a male, you got to have it in your car. But every time you buy something, whether it's a Starbucks, a sandwich, pay a bill, get gas, get groceries, write it down, because it's amazing how much more accurate that number is at the end of a few months than if you tried to tell us how much you think you need each month to live. It's amazing. And the number that's written down is usually quite a bit higher than what you think you spend. Mm-hmm. That's the sad reality about that. So you've got to find out where you're spending it. Where can I save a buck or two? And then you take those savings, as Casey mentioned, and you're going to divert those into your savings plan. That's why having it payroll deduction is so important, because then you're not going to find a way to spend it before it goes into your retirement account, which is truly what we all need to be doing. And some of us need to be doing it better than others, right? I think we all know that.
Elevated Financial Management, the power behind this show, Elevate Your Wealth. We're going over some things that you can do to help you kind of pile up a little cash as you're moving to your retirement date. And this is the obvious one, make it automatic coming out of your check before you even get a chance, as Mark just said, and Casey also said that, before you get a chance to spend it, put it into your retirement accounts, and then start working on a spending plan, a budget, as you are moving towards retirement. And if there's a way to save, and, we chuckled when we started talking about double the price. It's painful when you go out for meals now. So if you can cut back one meal and put that aside for retirement over time, it is really going to add up. Casey, the next one, it can be an absolute retirement killer, and that's the high interest debt.
Yeah, that this kills people and they don't realize it. I've had some very close friends get into this debt trap. And it is just such a burden on people's lives, and they don't realize it because that seems to be kind of the society that we live in. But all the interest that you're paying on that, that won't be helping you in the future. You're robbing your future self to help your current self. And you've really got to put that into perspective. I like cars. I like to have a nice car. I like to have a new car. And that's a hobby for me. I enjoy those things. But at the same time, keeping up with the Joneses is something that you've really got to be cautious with, right? If you have the money, you can afford it, that's great. But if you're living your life on a credit card and you're making those minimum payments, you're really helping out the lender and doing yourself a major disservice. And that's the big thing here, right? So if you can start paying those things off, pay off the highest interest first. As you've made that payment, then we can do kind of what we call a snowball, where now that payment is gone, but don't take that money and just start spending it on other things. Take that money and use it to pay off the next debt. So now you're making a bigger payment to that next high interest debt. And you can work to get yourselves out from underneath that debt load, that heavy burden that you bear. Borrow as little as possible. Try not to borrow for things that go down in value, because again, you're doing yourself a disservice there. That compound interest, we talk about that. You hear about that a lot. That comes from investing over time. And the key there is investing, right? That's if you're using debt, if you've got a rolling credit card payment, you have compound interest. It's just working against you, right? So you want to be on the right side of that and make sure that you're benefiting from it as much as possible.
No, we all want 25%.
Yeah,
which is what's happening on a credit card right now.
Big minimum payments, right? And make it out until
huge.
2040 when it's paid off.
Right, exactly. I mean, the amount of money that you could save if you can get that debt down and it can go towards your retirement, it is a win-win situation. So very important. Last one we have time for, we'll hit it really quickly, Mark, and that's if you're at work and they've got retirement plans there, investigate the 401k.
Yeah, you've got to, because I've got a lot of our clients come from Boeing, and they've got a wonderful 401k plan. Now, they don't have the pension anymore, which they wish they did, but they don't. But when you have a company that will match a certain percentage of what you put in, you want and must take advantage of that. It's free money, and so many people we run into are not doing that. So please look at your employer plan. They will automatically do a payroll deduction like Casey was talking about earlier. It's going to go in there. Then the company will put in their portion, or what we call the match. That's the nice thing about that. It's also going to lower your tax liability, right? Because money that you put in pre-tax will come off your tax bill. Now, it's going to hurt on the back end because it's all taxable. But again, that's where the Roth concept can come into play. Use a Roth if you have the advantage, because Roth 401ks do exist. So please use these plans to your advantage. Don't miss out on the wonderful free opportunity of free money from your current employer.
All right, Casey, we've got 10 positions on the calendar. Walk them through what's going to happen for these 10 appointments.
But, we've heard the saying that all good things in life are worth waiting for. And if that's a circumstance, you've been waiting, you've been building your retirement for 30 or 40 years. If it's worth waiting for, it's worth planning for. And that's really what this is an opportunity to get a written financial plan put together by our team of certified financial planners. You've been waiting for this. You've been building for this for a long time. You want to make sure that it's going to play out the way that you want. So we're going to talk about taxes. What can we do to lessen your tax burden in retirement and make sure that you keep as much of that hard-earned money as possible? We're going to talk about those income sources, make sure that they're strong, they're reliable. Do they adjust for inflation? Are they going to be able to continue through your long retirement and make sure they support that lifestyle? We'll talk about healthcare, so many different parts and pieces. If you got $250,000 or more, don't hesitate to pick up the phone, give us a call. We'll have a conversation and see how we can help.
Here's the number, 866-668-3625. That's 866-668-3625. You have nothing to lose, everything to gain. This is an opportunity, and it comes at no cost. 866-668-3625. When we return, how is a successful retirement like playing a game of chess? Well, they both take a lot of strategy, experience, and planning the right moves. Guess what? We'll talk about it when we come back. Welcome back into Elevate Your Wealth. Your hosts are Mark Stimson and Casey Elkins. You can find them right here in Seattle. Elevated Financial Management. Check them out online. They have a great resource website, efmnw.com. That's all letters. efmnw.com. Again, there are links to the TV show Elevate Your Wealth, of course, our radio show, all in podcast form there for you so you can watch and listen to your heart's content. And between Mark and Casey, 42 years combined experience, certified financial fiduciaries. And again, it's about helping get ready for retirement. That's what they do for hundreds of their clients, and they can also do that for you. We have 10 appointments available, and they are no cost, no obligation, no pressure. If you've saved at least $250,000 towards your retirement, these strategies are going to work best for you. You can grab an appointment right now by calling 866-668-3625. That's 866-668-3625. So we kind of plug this. So the game of chess, I mean, when you think about it, it takes a lot of strategy. We wanted to break down retirement as if it were a game of chess. So it's going to be your move. Guys, we'll talk about it. And Casey, we're going to go through the pieces that are in the game, and we're going to compare and contrast that to retirement. So first one up, the pawn. There are a lot of pawns on the board.
Yeah, I remember when I first started playing chess, my dad taught me, and I just remember I always was thinking like these pawns are driving me nuts. They're so slow. They don't move very far. It's irritating. I got to get them out so that I can get my other players on the board, right? And as you get older, you start to realize like, well, obviously that's a terrible strategy, right? You want to make sure those pawns, that's your first line of defense. And when it comes to investments, when it comes to retirement planning, the same can be said about the savings that you do over the years. When you first start, it can seem slow. It can seem boring. It's just not doing a whole lot. And I just kind of put this amount in month after month or paycheck after paycheck, whatever that is. And it just maybe doesn't seem all that impressive. But just like the pawn, over time, that will really start to build. That's your first line of defense. And as you approach retirement, the savings that you have done, those seemingly small incremental moves will really pay off if you've continued to do them, right? If you've continued to be disciplined with your contributions, you've made steady contributions, you'll realize finally the benefit of that. And so, we don't want to overlook it. We want to make sure that we're saving correctly. Again, that we're being strategic, disciplined about that savings, putting it into our retirement accounts and investing it properly. But that kind of slow and steady pace, that consistency is what's going to create success in retirement.
And it's about having that plan. I mean, we're talking about chess and strategy, but it's also, when you think about retirement planning, I mean, it is a game, and you want to win the game. You want to get to retirement and all the way through retirement. You want to be successful at it. So we're having some fun, equating chess to retirement planning. So we've gone over the pawn, and Mark, you're up next. You get the knight.
Yeah, I love the knight. He is actually one of my favorite pieces. We know the queen is the most powerful on the board, and we're going to get to her in a moment. But the knight is an excellent piece because it's the only piece on the chessboard that can jump over other pieces. And it moves in an L shape, either 2 over and 1 up, or 1 over and 2 up. It doesn't matter, but it always moves in an L, but it can jump pieces. So we liken the knight in your retirement game of chess to your safe money. Okay. Casey was kind of just talking about how important it is that it gets protected and you're diligent about saving your safe money, right? But the knight is such a wonderful piece to have because on our safe money, it's not going to give us astounding growth at any one time, but it's always going to be there. We call it in our planning software, we use red, yellow, green, and the yellow money is what we call bank inventory. So that's your safe money. We want anywhere from 6 to 12 months of liquidity in that account at all times because life happens. You need tires, your car breaks down, you need a new furnace, whatever. Maybe it's time you got to do a roof. So you've got to have that money that's equivalent to that knight on the board because you know what? It's important because we don't want that money to disappear, right? But we know its job, that safe money, it's going to be predictable and reliable. And we don't want to have risk of it just disappearing because of the market. And so, again, the knight is going to represent your safe money, the bank inventory, the money that we all need just to live. And life happens, right? I think we all know that. And when you have a bad situation with a tire or you need a brake job or whatever, hopefully you have some nights that you can move around the board to get your money and pay those bills that are going to come up.
Elevate Your Wealth, the program you're tuned to. It's powered by Elevated Financial Management right here in Seattle. Your hosts are Mark Stimson and Casey Elkins, and we're talking about strategy, comparing retirement planning to the game of chess, and we're doing it through the pieces on the board. We've talked about the pawn, we've talked about the knight, and now queen. I was going to do the queen introduction. You know, Your Majesty, the Queen. You know, because it's the piece that's on the board.
Yeah, it is. It's the most powerful piece on the board. She can move in any direction as much as she wants. I mean, it's the most versatile piece on the board, right? And when it comes to retirement planning, the money that you're taking risk with in the market, we would say that's the queen. We can draw a couple of comparisons. That queen can move all the way forward, and it can move all the way back. And your risk money can do the same thing. It can rise real high, and then things get turbulent, and it can fall way back. So there's also some risk associated with that. It can be concerning, but there's a lot of upside potential there with the risk money that we're taking. Of course, it has to be done in the right way. So, making sure, as Mark was talking about that red, yellow, green perspective, that green, that's the protected money that we're looking at. The red is going to be the risk money, right? And one isn't really better than the other. They do different things. They attack in different ways. They create different upside. They also have different downside, right? And so you want to have some diversification when it comes to it. When we think of chess, again, all these parts and pieces work together, right? That's the plan. That's the strategy. That's what this really boils down to, is making sure that our parts and pieces work together, that we're playing each one to its strength, right? We don't want to put the queen out in place of a pawn as the first line of defense, because then we could lose our most powerful player. And so we want to make sure that we're using our different investments in the right way. And again, playing them to their strength. And so putting our entire nest egg at risk in the market would be a bad use of the queen. If we have all the money that we've saved in market investments where we could have some great growth, but we could also lose a great deal of those funds, that is a bad play. That's not a strategy. It's likely just an emotional decision where we're trying to capture too much growth. And so, again, having a plan, making sure that we're diversified across the assets, and making sure that they're working together is what's really going to create success when it comes to the financial chess game that we're all playing.
Well, and we all want to win that chess game when it comes to retirement. And if you have any questions about what you're doing or maybe what you're not doing when it comes to retirement planning, there's going to be an opportunity to get on the calendar with Mark and Casey at Elevated Financial Management. No cost, no obligation, no pressure. The 10 appointments are open right now. All you've got to do is call 866-668-3625. If you've saved $250,000 towards your retirement, these strategies are going to work best for you. But here's the number. Grab an appointment, 866-668-3625. So talking chess and equating the chess pieces on the board to what is retirement planning. We've talked about the pawn. We've talked about the knight. We've talked about the all-powerful queen. But now we save the best for last because Mark gets to talk about the king.
Yeah, the king is the big daddy, right? That's the piece that the other pieces are trying to protect, right? And we will liken the king to retirement income, because if you fail to protect the king or you have to knock it over, we know that's checkmate, right? Well, in the game of life and retirement planning, the king is going to be your guaranteed, not your maybe income, but your guaranteed income. And the key is you've got to protect it at all costs. Because if you wake up one day and it's not there, we know the term, right? Checkmate, it's over. And so it matters tremendously to us that we make sure that the income that you are going to need each and every month is guaranteed. We don't want it to be just a big, nice fairy tale. We know that retirement income can be guaranteed and generated in a number of different ways. We haven't talked much today about Social Security, but what a wonderful tool that we all have that we're going to be able to draw on that gives us protection and spousal protection and helps us with inflation. Social Security is going to do that. If you're fortunate enough to have a pension, but the problem is about only 10% of retirees today are going to have pensions. Have become a thing of the past, so they're going away. Maybe you've got an annuity. In the right situation, annuities are a wonderful tool if you're trying to create your own private pension, because it's the only thing that we can put money into, create an income stream that you cannot outlive. You can't ladder bonds. You can't ladder stocks. There's nothing that you can do that's going to put the guarantees for income like an annuity can. What about maybe your thing is you love real estate? What a great tool that is in the right situation. But if you're too heavy into real estate and then real estate prices plummet or you lose renters, that can create an income draw and an income problem, right? So we want to be balanced about where our income is coming from, but there's a lot of different ways to create income. What about dividend income off of a good stock portfolio? We help clients to get that set up if that's really where they want a portion of their income to come from. But we will never, ever go past the point of not making sure that their income is guaranteed. We can't over stress that or overemphasize that, because if you don't have guaranteed sources of income, it can be a disaster if things don't fall our way. What happens if we roll snake eyes, right? And I think that being said, this part of our planning process and our team, it's amazing what our certified financial planners will help you set up and get your accounts the way that you want them so that you can count on that income week in and week out, month in, month out, no matter what happens in the market. So please have a plan, develop income sources that you can outlive, and never tip your king over and have to say checkmate.
Taya, well said. There are opportunities right now to get on the calendar with Elevated Financial Management. Meet with Mark Stimson, Casey Elkins, and their team. See where you are in your planning process. If you've saved at least $250,000 towards your retirement, these strategies are going to work best for you. Again, we have the 10 appointments. Call this number now and grab one. 866-668-3625. That's 866-668-3625. Gain some peace of mind when it comes to your retirement. If you have not started planning or you're in the middle of something, you need that second opinion, grab an appointment right now. 866-668-3625. When we return, we've got some retirement scenarios. We'll throw them at the fellas. We'll see how they do. That's coming up next. Welcome back into Elevate Your Wealth. Elevated Financial Management, the power behind this program. You can find Mark Stimson, Casey Elkins, and their team right there in Seattle. 42 years combined experience in the retirement planning business, helping hundreds of their clients get ready for their retirement, their golden years. They're certified financial fiduciaries. It's all about having a plan, folks, and we are here to help. I'm Morgan Patrick, consumer advocate. If you have saved at least $250,000 towards your retirement, listen up. We have 10 appointments on the calendar with Elevated Financial Management, and they're no cost, no obligation, no pressure. All you got to do is call the number and secure one of those appointments. 866-668-3625 is the number to call. That's 866-668-3625. All right, we've got some retirement scenarios. Mark, we will start with you. Here is the first one. What's the difference between a 401k and a pension plan?
This is something that we kind of wish, Casey and I, wasn't the reality. A pension plan is what's known as a defined benefit plan, and a 401k is what's known as a defined contribution. And the reality is that corporations have gone away from defined benefit plans. They don't want to be on the hook for that money and have to be the fiduciary for that chunk of money over a long period of time. And so they went away from that. In fact, Boeing, it's been gone almost a decade now. But I think most of the workers there would tell you they wish they had never changed that. They'd rather have the pension plan. Now, it is true. The pensions need to stay funded. And there are pension plans in the United States that are in trouble because of the very low rate environment that we saw over the past decade, maybe a little longer, bad investments. So when these pension managers weren't getting the return that they needed, they started taking even more chances, more risk. That backfired on a lot of these plans. So that's a drawback. But there are many, many good pension plans in America that are well funded, and it's going to create a payment for life. But it's on the responsibility of the company. Now, I remember my grandfather worked for Sears. He drove a little van around and he fixed everybody's appliances. And that's what he did for his whole career, probably over 40 some years now. Now, he, as we know, Sears is now pretty much out of business now, but he did collect a pension the whole time he was alive. So it is guaranteed income. Our happiest clients are absolutely clients that have two sources of income. They have Social Security, and then they have a pension. I was just on a fishing trip and sat next to an interesting gentleman, and we got to talking, and he asked me what I did. And I said, well, I do income and retirement planning. And he said, do you by chance have a radio show? And I said, yes, I do. And I said, we also do television. And we got to talking, and I said, if you don't mind me asking, how much income do you have coming in every month, and what's the source? And he said, Mark, I have 3 pensions and Social Security. And I said, wow. I said, how much does that accumulate for you each month? And he says, it's about $133,000 a year guaranteed. Now, I think most of us out there would take that all day long, right? To have $133,000 a year, and that's guaranteed. It comes into his checking account. All he's doing is living a wonderful life. He plans with his friend that he was with. They do 4 or 5 trips together. One of them is a widower now. Spouse has passed away. But because of the guaranteed income, it's providing a lifestyle that truly is amazing. And what a wonderful way for us to enjoy the type of retirement that we would all like to have, to where we have the income. Because truly, Casey and I will tell you, it is about income, income, income. And if you have that set up and it's guaranteed, you're going to love your life come retirement. And if you don't, and it's all geared around the stock market, and the market goes the wrong way on us like it did in 2000 and 2008, then we can be in big trouble. So make sure you have guaranteed income, because it matters. Casey's got a thought.
Yeah,
too.
go ahead.
Yeah, I want to add something to that, because I think, when it comes down to the 401k and the pension, as Mark was mentioning, right, when you have a pension plan, the fiduciary responsibility of that falls on the pension provider, right? With the shift in that setup, it falls on to whoever owns the 401k, right? It's your 401k, so it's your responsibility. And so at the end of the day, that's why when we talk about having a written financial plan put together by our team of certified financial planners, I mean, how often do we say that? We say that because we know that that's what's needed, right? When you have a 401k, you don't have a plan, right? You just have a bucket of investments, and you're kind of hoping for the best. But ultimately, what are the taxes going to look like? What kind of income is that actually going to provide for you? What's the best way to set it up to make sure that it lasts through your retirement? Those are all things that normally under a pension, you know what you're going to receive. And from there, you can calculate the taxes, and you're not really worried about necessarily how you're going to invest it, because that's being taken care of for you. But with a 401k, that's not the circumstance. These are things that you have to figure out, that you have to tackle. And the reality of it is, as Mark mentioned, we got a lot of Boeing clients, right? They're not financial planning people. They're not financial professionals. That's not what they do. So figuring out how to manage a 401k is not within their daily tasks. That's not something that they're equipped to handle. And that's the case for most folks. And so you need that help. You need to be able to figure out how this is going to play out for you and what it really means in your situation. And again, you've got to have a plan.
Plan so important. I mean, creating that ease of mind, knowing you got a roadmap to get you there, and not only get you there, get you through retirement. Going over scenarios, and we're going to throw the next one, Casey, at you. And here it is. Should I roll over my traditional IRA into my Roth IRA when I'm 60? I also have a work-related 401k with about $107,000 in it, as well as a designated trading account with $90,000. I have nothing but standard deductions, as our home is paid for.
That's a great question, and it's one we hear a lot because we talk about Roths, and people love the concept, of course, of having tax-free money right inside of their accounts. And so, moving into retirement, we want you to have as much tax-free income as possible, but how you get that tax-free income becomes a very important piece to the puzzle. It's hard for me to answer this question real directly because a lot of this is predicated on what your earned income is and how much is actually in your IRA accounts and things of that nature. So, at the end of the day, converting some of your money from a traditional IRA into a Roth is likely the right thing to do. The question becomes how much. And again, that is based on how much income you have and what the values are in those accounts. And so this is where a conversation becomes so important to figure out what is truly accurate in your circumstance. We've talked about this before. Just converting all the money in your traditional IRA at one time is not the answer for most folks, because usually that's where people have most of their money saved. So if you were to convert a couple $100,000 or $300,000 or $400,000 or $500,000 all at once, you have got a massive tax burden to deal with, and you're really not handling that in the most strategic way and being a good custodian of those funds. And so we want to make sure that there's a plan associated with those conversions, make sure that we're maxing out the tax bracket, doing it as efficiently as possible so that the end goal of paying less in taxes can actually be realized instead of just taking this big hit up front. Because we're kind of making an emotional decision. We want to have a plan surrounding that, have a strategy to make sure that that really does net the benefit that you're going after.
Scenarios makes you think about your own situations, and you might have something that's close to what we talk about on the show, but it's not exactly what you're going through. You need to have a plan that is detailed, a plan that is custom to you. The opportunity to get on the calendar with Elevated Financial Management, it is ongoing. We have the 10 appointments. If you've saved at least $250,000 towards your retirement, again, these strategies are going to work best for you. The number to call to grab an appointment is 866-668-3625. This is no cost, no obligation, no pressure. 866-668-3625. All right, next scenario. And this goes to you, Mark. How can I locate an investment account that I've lost track of? And this happened many years ago. The firm that I invested with sold to another firm.
Well, hopefully this is a good lesson for everybody listening. We definitely want to know where our money is. We don't want to lose track of it, right? Because sometimes it's amazing the job that we have to do sometimes to find what we call cost basis. What was the original amount that was used to purchase a stock? And back in the old days, they didn't have to track that. The big firm, Fidelity, the Schwabs of the world, the TDs, they didn't have to track that. Now they do, of course, but that can be a problem. So record keeping does matter. I would tell that to everybody. Don't lose track of your account. But if you should, there is a place where you can go. And I want to say from personal experience, probably less than a year ago, I used this very site and was able to go back, and I got like $2,700 that I had no idea was there. And some of the money had been in there for over 15 years. And so I want to give everybody the web address. So you can go to the Office of Unclaimed Funds, and each state has one. So you can Google that. So it's Unclaimed Funds. And it's usually going to be part of the state comptroller's office. But here's the website that you can check out no matter what state you live in. So please write this down. It's www.usa.gov/, then the word unclaimed, -money. So let me do that again, www.usa.gov/unclaimed -money. And if you do that, you might be pleasantly surprised at the amount of money that might be sitting there that you had no idea was there. In fact, I had a friend tell me to just check it out, and I did, and I found a couple of old checks that had been put there that I had no idea about. Even though they were that old, I ended up getting the money. So it is a wonderful place to check, because you never know what you might find.
Elevate your wealth. You're tuned to it. We've just completed our scenario portion of the program. Now's an opportunity for you to get on the calendar with Mark Stimson, Casey Elkins, and their team at Elevated Financial Management. Casey, walk us through. We've got the 10 appointments. What's going to happen for these 10 callers?
Well, we've talked about it a couple of times, Morgan. And it seems like we talk about it all the time because we know that ultimately a plan is what's going to make people successful in retirement. A written financial plan is what's going to give folks the peace of mind to know that they can retire and can do it successfully, that their money's going to last. And so that's exactly what this is. For those that are willing to pick up the phone, give us a call. We're going to help you sort out that financial chess game that you've got going on to make sure that you can be successful in retirement and that you can have the retirement that you want to live. So we will sit down, we'll put together a written financial plan. That's Mark, myself, our team of certified financial planners. We're going to have a conversation based on you. What makes sense for you? What fits in your life? To make sure that we use all the right tools and use the right parts and pieces in the right spot to make sure that you're successful. So we'll talk about income, taxes, what we can do to help with healthcare, whatever that circumstance is, whatever your circumstance requires, we'll build something custom tailored specific for you. So if you got $250,000 or more, don't hesitate to call.
Here's the number, 866-668-3625. That's 866-668-3625. Don't hesitate. Call the number now, 866-668-3625. Another edition of Elevate Your Wealth is in the books. For Mark Stimson and Casey Elkins, I'm Morgan Patrick. We'll see you on the radio next week.
Investment advisory services offered through Foundations Investment Advisors, LLC, an SEC-registered investment advisor. The content provided is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of Foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific opportunity, offering, or issuer. Any discussion of performance or returns is not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in states where it is properly registered or excluded or exempted from registration requirements. Registration as an investment advisor is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. No legal or tax advice is provided. Always consult with a tax professional. All rights reserved.